In September, 136,000 jobs were added to the U.S. economy. The unemployment rate fell to 3.5%. Joining us now to discuss what this report says about the state of things here in the U.S. is Mark Hamrick, Bankrate.com's senior economic analyst. So, Mark, let's just start high level here. What was your takeaway from what we saw in September's numbers?
I was breathing that proverbial sigh of relief, Miles, because coming into this report, as you know, we had a couple of downbeat reports coming from supply managers, including that dour one covering the manufacturing sector, and then a disappointing reading on the services sector. So I felt as if there was a high risk of a downside surprise. So to the extent that we essentially didn't get that, and we had some upward revisions in the previous 2 months, I think we can now put the fears of an immediate recession on the back burner and perhaps celebrate, at least for a time, that we do have an unemployment rate at this low level.
Back to those surveys from earlier this week, does this number that we got from the BLS make you maybe question the value that the market had placed on that manufacturing and the service sector data? Because I think there's a lot of value in the surveys, the soft data, but perhaps investors got too excited about what that said about where the economy actually is. It's a little bit more about where businesses fear it might go.
Well, that's why stock prices move, Miles, right? And otherwise they'd be fixed, and we wouldn't have to be talking about all this. No, I don't want to downplay the value of that data at all. Having watched it for many years, I know that it's very important data, and it'll continue to play an important role in how we analyze the economy. And the jobs report's important too. You know, looking at where we are on payrolls right now, on a year-over-year basis, we're down about 27%. I believe we're averaging about 220,000 jobs a month. This time last year, we're at 161,000 year to date here. So that's a significant slowdown, but it's of course within the context of this low unemployment rate. And so we shouldn't be expected to be growing at the same rate as before.
Let's talk about the hourly earnings number in here, because we are talking about the consumer so much and what they are carrying on their backs in terms of the economy right now. It's great to have a job. It's really good to have a job where they're paying you more money. Is there any concern for you in that number?
Well, there's always been concern on my part with respect to the wage component of this report. Indeed, the lack of wage growth has been the most disappointing aspect of this now 11-year-old economic expansion. I can remember talking to Labor Secretary Tom Perez when an administration would actually trot out the Labor Secretary on a regular basis to talk about these numbers, and he would say at the end of the Obama administration that this was the last bit of unfinished work with respect to the expansion. Well, guess what? It's still unfinished, and it may never be finished. And it comes, by the way, at a time now when we actually do have some burgeoning inflation, and we know some of the outliers with respect to rents and healthcare and education don't really align well with the, hey, isn't it great we've got low inflation kind of mindset. So yeah, it's very worrisome to me, because the lack of more substantial wage growth, particularly for the middle class, is at the heart of why we're suffering through this political situation in this country, not only in the U.S., but elsewhere in the U.K., for example.
Why should investors be sitting here today and be celebrating a significant slowdown in the U.S. job market?
Simply because it wasn't as bad as what people feared. It's as simple as that.
All right, Mark Hamrick, Bankrate.com's senior economic analyst. Mic drop there. Appreciate your time, Mark. Talk to you soon.
Thanks so much.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.